Yo, what's good, y'all? This is your boy Jay Devar, man, coming at y'all with another video. And honestly, y'all, in this video this week, I'm doing what my weekly outlook is gonna look like going into next week's trading week. And yeah, also too, I'm gonna show you guys what some of the trades that I took last week looked like. Cause in my previous video, I was talking about like what I wanted to see and what I wanted to execute on in US30 last week, being that it was a pretty volatile week. We had NFP and we had the interest rates coming out, so that was a pretty interesting and volatile week. I'm gonna share with you guys like some of the mistakes I made when it came to like actually following my rules and my executions, and showing you guys where I probably should have exited at, instead of trying to catch the entire weekly range. But yeah, I'm just share you guys some of the mistakes I made this week and honestly what I should do better on, and just reiterating that you need to follow through with your rules and follow through with your strategy, man, and just kind of tweak it here and there to to like really get to like that goal or that stage of like profitability, right? So with that being said, before we get into the video, I'm gonna ask you guys, please like the video, subscribe to the channel, turn on the notification bell, and also to leave a comment down below, just giving me some feedback, or and also to just let me know if y'all learned anything from this video. So with that being said, we're gonna go ahead and get into it. So I'm gonna minimize OBS, and we're gonna go ahead and get into it. So right now, currently, as it stands, this is the monthly chart for the US dollar. As you guys can see, we have a monthly inversion fair value gap right here that we're currently testing this monthly candle right here. And as you can see, it's already wicked. And so right now, currently, as it stands, it's resting inside of this monthly inversion fair value gap. I had this marked as yeah. So now, after looking at the monthly, this is the current PDA rate that we're resting inside of right now in the monthly. So as it stands right now, I'm anticipating this monthly external range to be ran through, and then we actually head up higher into this imbalance up here that's inside of that we're currently sitting in. So we kind of head higher a bit into this imbalance right here on the monthly time frame. Head higher, right? Today is Sunday, also the 5th of May, Cinco de Mayo. All right, y'all be sure to get y'all drinks, get y'all margaritas, all the other sort. So now we go down to the weekly time frame, and currently right now as it stands, we have this weekly premium discount range right here. Currently right now we are resting in the discount. We are currently trading in the discount of this weekly range right here. So this is the impulse move that ran this high right here and ran this high right here up into this daily volume imbalance that you won't see it until I go to the daily time frame. But right now, currently as it stands, we are in the discount of this this weekly range, this impulse leg right here on the weekly time frame. Also too, we are currently just a bit below the internal range liquidity. So this internal range liquidity is basically this weekly fair value gap, but I don't have it marked as a fair value gap because obviously I see that it's a gap. This low, this month's low, and then this month's high right here forms this fair value gap. But which is also internal range liquidity, and as you can see, we've already tapped into it one time, and we've tapped into it again, right? Except the time that we tapped into it right here, we were still in the premium of the range. But now, since we're in the discount of the range, I'm anticipating to see higher prices, and then we go ahead and run out these relative equal highs right here. You'll see it more clearly when I go down to the lower time frame, which is the daily. That's the next one I'm going to. So, and also too, you'll see the more PDA rays resting in here that kind of like help me to anticipate the higher likelihood of that we're going to see higher prices, or that we're going to see this buy side taken, and then this monthly external taken, and then reach higher to this imbalance right here to fill in the rest of this imbalance on the dollar, right? So right now we're gonna go down to the daily, right? See this relative equal highs right here. So this high and this high, that's the buy side liquidity. So this is the liquidity pool that we're anticipating to be taken out going into this week, or at least getting close to taking this out going into this week. It doesn't have to do it exactly this week. It can like hit higher from here, hit some time, run this low, and then kind of range out the rest of this week, and then the next following week we can see it go ahead and run out the buy side liquidity. Because right now, currently as it stands, we don't see there isn't too much of any red folder days for the US dollar. As you can see right here, so Monday we don't have anything, Tuesday we don't have anything, Wednesday we don't really have anything except this intermediate or this medium impact news event right here. That's at 1 o'clock on Wednesday. Thursday we have one red folder day, that's the unemployment claims, and we had a 30-year bond auction. And on Friday, the consumer sentiments, we have that. And then also too, we have the FOMC members speaking, so that might cause a little bit of volatility, you know, going into this week, but we'll see. But like I said, you know, this week it could potentially just say head higher. It may run this high and run this high, and then just, you know, range out the rest of the week. And then following into next week, there's like some more volatile news events. We might see it go ahead and run the buy side in that week. So, but as it stands currently right now, we're looking for higher prices. Reason why is because you see I have this daily fair value gap right here, and I also have this midline in my fair value gaps. So this midline represents the consequent encroachment, right? So this is the 50% of this entire fair value gap right here. So as you guys can see inside this daily fair value gap right here, we've hit the consequent encroachment. We haven't closed below it. It came down, filled in the imbalance, and hit that consequent encroachment, and now it respected the consequent encroachment and also respected the daily fair value gap because it's no longer sitting inside of it right now. There's also another confluence here. Right here is a daily breaker block. Right here, a daily breaker. Honestly too, I can push it up to here with this candle right here. I really can use this. Actually, no, I'm not gonna do that. I'm gonna use from the open to close of this candle right here. So we have a daily breaker right here also. So that's a double confluence that we have to, you know, basically align with our bias of wanting to see higher prices going into this week's trading. I go down to the 4 hour. I'm not going to go any lower than the 4 hour. Yeah, I'm not going any lower than the 4 hour because I'm not trading this. I'm just, you know, I see that I have enough confluences on the daily and the 4 hour time frame, you know, to, you know, align with my bias of, okay, I want to see higher prices. So on the 4 hour time frame, you guys can see right here we have another breaker block that's right here, 4 hour breaker, broke above this high, this order block, what used to be a bearish order block right here. And it's actually, yeah, this is a form of mitigation. So this is also, not only is this a breaker, this is also a mitigation block because breakers are just a form of a mitigation block. So it came lower, but would have been, so price came lower, but would have been a bearish order block right here. I can just go ahead and mark it. But would have been a bearish order block, right? Would have been a bearish order block turned into a breaker block because we ran this high. We ran the high, took it out, and headed higher. And eventually, when we traded back to it, we have this new breaker, right? This new breaker that's also resting inside of the daily breaker that I had marked out earlier, and we've traded to that and above it. So currently, right now, we're respecting it, and we're also respecting the 4 hour breaker. So right now, as it stands, I'm anticipating the buy side liquidity here, these relative equal highs right here, to be basically to be ran and taken out. If not this week, definitely in the following week. But if we want to see any type of like bullish price action, this is the week that I want to see it, right? So preferably, you see, we have a fair value gap resting here. If I want to see higher prices and see the high of this range, take it out. Ooh, my bad. If I want to see the high of this range taken out right here, I want to see this fair value gap right here actually turn into an inversion fair value gap. So we see price trade higher. We see price trade higher, trade to it and through it, and then we have our inversion, and then that's our confirmation to want to see higher prices right there. Right, so that's currently my analysis on the daily time frame. That's my bias. I want to see these highs, these short-term highs over here being broken, and then being used as a form of support. So like a break and retest, and then head higher, right? And also too, there's this is like another, technically this is another order block over here, right here. So we have this candle's close. We have this candle's close right. No, this candle's open right here, and then we have this candle's close below this candle's open. So that technically is a order block. And if we get here, trade above this inversion, and use this inversion as a form of retesting for higher prices, we also have this will form a breaker right here, and this also could be used as a form of mitigation to see higher prices, right? So that's my current analysis on the daily time frame. Now we're going to go to what I'm going to be trading. What I'm going to be trading is US30, right? Because right now I'm only trading the indexes right now with this new strategy that I have. Right, I'm not dibbling and dabbling into anything else just yet. I'm currently focused on one market right now. So that being said, you see right here I have the Sunday's opening price or Sunday's closing price marked out right now, and this right here is basically a part of my strategy. So what my strategy is like, I mark out Sunday's opening price, and then what I want to see is if I'm bullish, what I want to see is from Monday to Wednesday, I want to see if we have any type of lows taken out on Monday. And as you see right here, we do have some lows resting below Sunday's opening price, and we also have a fair value gap right here at Sunday's opening price, resting below Sunday's opening price. So if we want to see, higher prices, ideally this is what I want to see happen. We have the Sunday open. I want to see price on the market open up on Sunday, and then from anywhere between Monday to Wednesday, I want to see some lows be taken out, and then a PD array be reached for, an opposing PD array be reached for, right? So Sunday open, I want to see like these lows taken out between Monday and Wednesday. Ideally, I will look to execute a position on somewhere between Tuesday and Wednesday. Monday, from what ICT taught with the strategy that I'm using, from what he taught, he's saying like he likes to use Monday's range as kind of like a filter point just to see what's going to happen. So if we form a low, say on Monday's range, say we run the high, then we have a low form on Monday, and then Tuesday we open and then take out that low on Monday, and then we see a short-term high get broken on Tuesday, right? And that's our confirmation that we have a market structure shift, and that we're gonna head higher, right? So the reason why I'm kind of not bearish, but bullish right now at this point in time is because we have this weekly internal range liquidity pool right here. So we actually respected this one a couple weeks ago, and we traded lower. We didn't take out the external range liquidity right here. So the past couple weeks we've traded higher. So I had to shift my bias towards being bullish in the short term, because right now as it stands, we're in the premium of this weekly discounted premium range inside of another monthly range right here. So So currently, right now, we're only bullish for the short term, but eventually, when we do reach here, we reach inside of this internal range liquidity pull on the weekly time frame, I want to look for a market structure shift to occur inside of this PD array or inside of this area. So I'm expecting this high to be respected because this is currently, as it stands, the new all-time high on US30. So I'm expecting this high to be respected, right? So what I'm gonna be looking for is some type of confirmation to head lower, so like a market structure shift inside of this weekly internal range right here. As you guys can see right here, since last week we closed bullish, I'm anticipating this week that we're gonna continue to expand up into this higher time frame objective right here, right? So that's why short term I'm bullish, but in the long term I am. In the short term I'm bullish right now, but in the long term I am bearish, because like I said, once we get here, I want to see a market structure shift and some type of. You can also use the SMT. You don't have to use that, but I've just been using that as an extra confluence. But you don't. It's not necessary. But yeah, that's currently my current trade idea right now on US30. If this idea right here, hang on. So if this doesn't exactly happen, as how I'm, how I want to see it happen, because like on Sunday we could just go ahead and open up and head higher right here, and if we open up on Sunday and then Monday we trade higher and we actually reach for this internal range liquidity pool on Monday, I'm immediately shifting my bias to bearish, especially like if I see say Monday's range we trade higher and we hit the internal range liquidity pool right here. So we have a low formed on Monday, then we head higher. We form a high on Monday, and then Tuesday we form a high. We break Monday's high. And if we see any type of like displacement downward, on Tuesday, right, and we break, say, a low or short-term low from Monday in Monday's range, I'm shifting to bearish because that's our market structure shift inside of this internal range liquidity pool, right? So I'm looking for Tuesday's high to be protected, and I'm going to execute. I'll look to execute a position, and then I'll be targeting back down into this imbalance as the low hanging fruit objective, right? And then I'll potentially look to leave something on, and potentially this is another objective right here. So another target right here, and this is another target right here, right? So currently, as it stands, that's my current. That's what I'm looking to do this week. Like I said, if Sunday we open up and then Monday we form Monday's range, heading higher up into the going ahead and tapping into the internal range liquidity, I'm going to be looking to go bearish, right? But on Sunday and Monday, if we open up and head lower and tap into the imbalance that's resting right here, okay, I'm shifting to bullish. And then I'm targeting this higher time frame area right here, this higher time frame objective right here, right? So currently that looks like this. If I was to execute on it, stop right here. We'll have like a 1 to 6. I normally like to go from 1 to 2, but honestly at this point I'm kind of at the point where I'm kind of like, man, do it really matter? Just make some money. So, yeah. That's currently what my trade idea, or what I'm looking to happen in price action, what I'm anticipating to happen in price action, right? Because either one of these things can happen. All I know is, what am I anticipating? Depending on what happens, am I prepared to execute, right? So that's my current analysis and what I'm going to be looking for going into this upcoming trading week. Starting at about 6 o'clock today for the indexes. Now I'm gonna show you guys the trades that I took last week. Right, this one ended up being a loss because I wanted to take out. I was looking for this to actually be a reversal pattern inside of the internal range liquidity pool. The previous one that we had, So we have two. So we have this one. This is the one that was traded to last week, and we had a reversal pattern in it last week. And this is the other one. And currently, right now, this is the one that I really think that we're going to be reaching for, right? But going back to what I was looking at last week. So last week, remember that S&T I told you about, that smart money technique? We have an S&T with NAS, right? So we have an S&T with the NASDAQ right here. So Wednesday, April 24th to Monday, April 29th. On US30, you see we had this high and this low. So on US30, we didn't break this high, we had a lower low. We had a lower high, right? So we had a lower high on US30, but if we go to the NASDAQ, you see Wednesday, April 24th to Monday, April 29th, right? We have this high and we have a higher high. So NASDAQ formed a higher high during that same span. And we also have another S&T over here. We have another one over here, but ideally you want to use the ones that's more so aligned with the same week. So from that same time period, from the 24th of Wednesday to the 29th on Monday, we formed a higher high on the NASDAQ. So we took out this high, we formed a higher high on the NASDAQ, but on US30, we had a lower high, right? So that confirmed US30 as the weaker asset, because these assets, the NAS, the S&P, and the US30, they should all really be moving as correlated assets. But if you see at any point there's like a break in that correlation, that's how you know that there's some smart money involved, or there's like some type of there's some institutions that are involved, right? Based off how ICT taught us how to use S&T, or how to recognize S&T and recognize that there's institutional sponsorship in the market at that point in time. So we had an S&T with NAS. We also had an inversion fair value gap right here, and also too we had an order block, right? So when I saw that this order block was respected and this inversion fair value gap was being respected, my entry was right here at the Sunday's opening price, right? So Sunday's opening price was right here, right? Not right here, right here. Sunday's opening price last week was right here, the 28th of April. So remember my strategies, like if I'm bullish, I want to see a low get taken out and then hit higher, and see a market structure shift and then a confirmation to hit higher. And if I'm bearish, I want to see a high get taken out and tap into a PD array of some sort, respect the PD array, and then have a market structure shift, right? And to confirm lower prices. And that's exactly what happened. That's exactly what happened last week. So we had Sunday's opening price. We had this. So we see price, we opened, we traded higher. Monday comes around. This is the Monday's range. So Monday's low to Monday's high, right here. This is that range. And with that range, we also formed that S&T, right? So we don't necessarily need to see on Tuesday the high get taken out on Tuesday, because we kind of have a confirmation already. It would have been nice to see and then still see a rejection, but yeah, we have the confirmation that we need. We had enough confluence right here to be confident enough to see that we should see not higher but lower prices, right? So my stop went above Monday's high right here. That's where my stop went. Well, I think on the trading platform that I use, that's where my stop went. And then see Tuesday, so on Tuesday right here, we actually did end up taking out one type of high right here. Not this one, but, well, this one doesn't really have a high, but, we did have some type of like liquidity raid right here from Monday to Tuesday. We had that. So Monday's high is protected. Tuesday we saw that trade lower, right? And my entry was on the retesting of the Sunday opening price. So the open of this Sunday candle right here, that was my entry. I did that on the 1 hour. Yep, that was my re-entry. Wait, was it 1 hour or 15? I think it was the 15. No, it wasn't 1 hour. Yeah, I just did a 1 hour retest of the Sunday opening price. And as you see right here, that was my entry right here. And then also too, you see we have an hourly. Now, what used to be an hourly fair value gap, you can use that as an inversion gap now. Mark that right here. You can use that as an inversion gap if you want to. I wasn't looking at this in the current price action, but you know, if it's something that you see, it's something that you can definitely use as a confluence to see lower prices. Because either way, your stop is going up here. Even if it can like come up and fill the imbalance a bit more up here, your stop is up here for a reason, right? So that's something that you saw, or if you were using this strategy and you saw that, that's definitely something that you can use. But you know, you don't have to use every single PD array that you see. You can really only use specific ones. But so this trade right here, I was targeting this low right here to be taken out, and we won on that one. But I took this trade right here because this fair value gap right here. So, and I was really dead set on wanting to see like that weekly. Remember I told you like that weekly external range to be taken out down here. All right, so that weekly external range or that external range low to be taken out. That's what I was anticipating for. However, this was also NFP. This was also the interest rate. This was the interest rate announcement, right? So you see that these large candles right here, that was during the interest rate announcement. And honestly, after Tuesday, I should have just stopped trading. That's the mistake I made. I should have just stopped trading. And then going into Thursday, I forgot what event we had going on Thursday, but it was also pretty volatile. And then Friday we had NFP, and as you guys can see, yeah. Also too, this is also one of the rules too. If you see at any point price trades back to the Sunday opening price. So in this case, since I was bearish, I want to see lower prices. If I see any type of retracement after Wednesday back to Sunday's opening price, that potentially signifies that, well, not potentially, but most of the time that's going to signify that there's been an intra-week reversal, right? And as you guys can see, that's exactly what happened. Stop got taken out. So you live and you learn. Those are some of the mistakes that I made last week. One, I should have stopped trading after Tuesday because it was already a pretty volatile week. Two, once I saw it showing any type of once I saw price showing any type of indication to want to head back towards Sunday's opening price, I should have exited this position, but instead it ended up being a loss. So you live and you learn from that. And yeah, man, that's yeah. We're gonna go ahead and end the video right there. That's my trading recap from last week, and then also too that is my also what I'm looking to execute on going into next week. So if you guys enjoyed the video, please like the video and also subscribe to the channel. Also leave a comment down below in the comment section letting me know if you guys actually learned anything from this video. Also too, just give me some feedback on maybe what I can do better. And with that being said, I'm gonna see y'all in the next video, and I wish y'all a happy trading week. All right, peace out.